Here's a trade setup we took with members of Active Trader Pro. This is a trade setup in Boeing. This is a very risky, very short-term trade. This one had only 7 days until expiration. This trade was put on Thursday, March 25th. And we're going to step through it. So we took a 2.5 wide call vertical spread. Stock was trading at around 241. We took a 245, 247 half for about 85-cent debit. So the most we can possibly lose is the debit paid, and the most we can possibly make in this trade is the width of the spread, which is 2.5 points or $250 minus $85, what we are paying for this trade. Now we can step through this trade and see how it evolved. We did make one adjustment as the stock started to move higher. Now we're at 244. So Boeing has traded higher by a couple of points. We went ahead and we sold an out-of-the-money call spread, which was 5 points wide, that removed all of the downside risk, left us with a potential profit somewhere between 247.5 and 255 in exchange for the privilege of reducing our downside risk to zero. We had introduced upside risk. And this is what this trade looked like with 7 days to go. We're going to look at this trade day by day. So this is Friday, March 26th. Boeing is now trading at 245. We're still profitable in this trade. Continue to monitor. This is the following trading day, which is Monday. Now we are inside of our structure, starting to accumulate some short delta on the upside. Again, we only need to monitor risk on the upside here. We go 1 day further. Again, we're square in the middle between our short strikes of 247.5 and 255. We're now showing a profit of about 30 or 27% return on risk. We go 1 day further, and now we tested our upside break even. This is Wednesday, March 31st, yesterday. We're right at the short strike of 255. Trade is showing about a 40% return. And now we go to where we are today with Boeing trading exactly between the 247.5, which is where our short call is, and our next short call is at 255. Boeing is currently trading at about 251, almost 252. So now we have a 2.5 point wide call credit spread that is worth almost $2.50, and we have a 5 wide call credit spread at 255, 260, which is worth almost nothing. So the most this trade could be worth is $250, right? So if this 2.5 wide call spread is worth max value at width of the spread, which is 2.5 points. So this spread could be worth $250 if Boeing is above 247.5, and the 255 to 60 short call spread will be worth nothing on expiration today. We have about 2.5 hours to go. I think it is a good idea to potentially close out this trade. This one could be closed for about a $2 credit. The way to close this trade, we can buy the 255 for about 25 cents. And we could attempt to sell the 245, 247.5. We know that the most it would be worth is 250 at expiration. We will not be able to close out this spread for its full value of $250. So maybe selling it for about $2.35, maybe $2.40. It is a good idea here.